We have with us Bhavik Mehta, Vice Research President at Century Financial. Thank you, Bhavik, for joining us. And the first question addressed to you. What supports the performance of the UAE banks at this stage, 2024? We have seen the performance of the banks being exceptional. That's how it was described. Will this momentum continue?
Thank you for having me on the show. Well, as you have rightly pointed out, what has happened is the UAE banking story that we have seen over the last 12 to 18 month period. We are seeing a solid rise in the not interest income of the banks. So we were in a stage where banks were increasingly dependent upon the net interest income margin. That is the difference between the deposits and the loans. But the narrative that we have seen is rise in the overall forex fees, trade finance transactions, as well as fees being collected by the banks in the form of the investment products and everything. So that is one thing that has been driving the UAE bank success story. Just 2 days back, I think we had the ADCB banking results. They showed a superb 44% rise in the non-interest income part. So the overall trends, I feel, are favored towards the banking success. So the narrative is increasingly going from fears of interest rate fluctuations to one wherein these banks are targeting the population rise in the economy.
We do expect, based on your answer, that we will have less provisions. Did this happen? And what about the quality of assets?
Well, to be very fair, I think we could see some rise in the impairment cost. We could see the cost to income ratio go up because what's happening is like city like Dubai, where real estate prices have increased by 80% over the last 3 to 4 years. So banks are going to be skeptical. They will keep aside some provisions because many of these lenders have a big sizable exposure to the real estate developers. Even we have seen a record amount of mortgage loans that have originated last year. So you could see a scenario where the impairment cost goes up. Again, the case of ADCB Bank, which had come out with the earnings few days back, it had a 60 to 70% spike in its impairment just to create a safety buffer and withstand any negative effects.
The interest rates, as you know, they are one of the main tools that the banks use, and they keep a close eye on the interest rates, and we are expecting a rate cut very soon. How will this affect the Emirati banks?
Typically, what happens is the timeline from the actual central bank interest rate cut to the actual benefit for the end consumer, there's a lag of at least like 6 to 9 months, bare minimum, that actually starts showing. So what we really want to see is a consistent rate cut trajectory by the US Fed. Unless and until then the actual impact won't be seen in the main retail market.
Bhavik Mehta, Vice Research President, thank you so much for being with us.
Thank you.